Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting episode of Stock Options Hero. Oh yeah! All right, let's jump into it. So let's take a look what SPY is doing. So, looks like it's channeling sideways and trying to retest this upper resistance level. So, usually when I see this pattern forming, some people refer to it as a pennant. It will most likely kind of bounce around between this resistance and support levels. So my educated guess is it may retest this resistance, and then if it fails, go back down and touch this lower support. Most likely around 390 would be my guess. So let's see, how is everything going? So PL day 453, PL open 684, net lick 102 250 or 245. It bounces around quite a bit. So, okay. Positive is a good sign. We've had several positions close. So we've had 44 orders thus far. So P&L is 2,500, 2,525. So, okay. So far, so good, considering the market hasn't been very volatile lately. And when you sell options, believe it or not, the greater the volatility, the more expensive the options get. So then you can receive more credit when selling an option. So generally, we like implied volatility to be above 50. This one's SPY is at 18. Let's see, where's the VIX? The VIX is around 1915. So, as you can see back here in October, when it was around 33, that would have been a great time to sell options, as well as when it spiked over here on March 10th. So, it's a good idea to keep an eye on the VIX, especially if you're an option seller. So right now, looking at the VIX, here, let me maximize. This, because we're at the lower end of the VIX range, is not an ideal time to put on short options, because simply you aren't receiving as much credit for them as you would up in these ranges above 25 and around 30. This is when options tend to get juicy, and that's oftentimes when I like to load up on short options, because I'm getting paid better for the risk I'm putting on. So would you rather put a trade on with the VIX at 30 or at 19? Right? So basically it's the same risk, but you're getting paid more when the VIX is higher. Granted, with higher volatility, the stock market's more choppy and can surprise you, but because you're collecting more credit, you have more of a buffer if things go sideways and your trade goes against you. So keep that in mind. Because I'm showing you the trades or this strategy, I will still put trades on, but I want you to be cognizant that this is not an ideal time to put on trades. Now, that being said, we've still made over $2,000 since we've started in our net lick. And then if all of our options expire worthless, our net lick will be 105,611. So roughly 5.6% return in 45 days. I think that's pretty good for an 85 to a 90% probability of expiring out of the money. Now, I use 85 to 90% using this prob OTM column, and then combining that with technical analysis to increase that prob OTM. So the floor is usually around 85% or better for the trades I like to put on, and then using technical analysis, in my opinion, adds 5 to 7% in my favor because of where the chart is, technically speaking. Now, if you watched my other videos, you might be wondering, why should I listen to the Stock Options Hero? Well, I've been at this for close to 20 years. So, you're welcome to watch other channels where they're just figuring things out, or you can benefit from my vast wealth of experience of trading options for a very, very long time. So, let's see, what is today? April 10th. April 10th, putting that into a watch list. There we go, switching over to charts. What's going on? Something wrong with my implied volatility column? That's not good. Or do we just not have that many? Okay, so I wasn't able to fix the implied volatility column. They must be having an issue with their platform, so we will do our best with what we have to work with. Okay, so we're in Meta. I think it's running out of steam. I really don't see it going much higher. So, not too concerned at this point. We're in INTC as well. We're in Amazon. Disney. No. Apple. Oh, okay. Look at this one. I mean, the IV is only 31. IV ranked 24%. Not ideal, but I do like the downward trend, how it got close to the +2 standard deviation LRC and failed. I like how MACD is getting ready to cross to the downside. Stochastic has already crossed, heading lower. The DMI over here on the right pane is crossed, heading lower. So, yeah, let's trade this. What is the 170 or the 175 going for? Okay, so remember, we like the 17 delta and 85% prob out of the money. So let's do the 175 and the 180. Okay, so risk 429 to make 71. Once again, the ROC, or return on capital formula, is the credit divided by the buying power effect. So 16.5%. Decent. So, and then always limit your trades to 1% of your net lick. So, because we're at 102, we could do 1,000. So one more would put us around 1,300. And that's $290 more than we can spend. Make sure you follow your rule, especially when it comes to how big your trades are. That's probably the number one thing I see when people fail to be successful in their trading is trading too large for their account. See, if you're trading 1% of your account, you put on, theoretically you shouldn't do this, but if you put on 100 trades, very unlikely that all 100 trades will move against you, especially if you're at the 85% prob OTM level, right? So we'll send that off. Should get a pretty quick fill because it's Apple. And yep, there we go. Even at the midpoint, Apple filled quickly. Because, oh, I called it. AI. In a previous video, I said AI will most likely trade back down to the support. And even when it touched support, it tried to rally, but it never had a bullish engulfing. So it looks like this is bearish, and it will most likely retest support. And potentially fail. I don't know because of how popular AI is right now, but most likely will stay range bound from $20 to $30 per share would be my guess. So I don't like the uptrend on GE. And it has been pretty strong since the first of the year. Hasn't shown much weakness. So yeah, that's a pass. So GM, if the chart was on like February 16th-ish, then I most likely would have put a trade on. Because if you look at the MACD, stochastic, yeah, it would have been a great entry. Look how it GM follows these LRC. And yeah, we could have got in there, probably would have got out around here with our 50% of our original net credit, and then moved on to the next trade. KO, Coca-Cola Company. So looking at the chart over the last 12 months, it doesn't really like to trade up to the plus 2SD LRC. So I would say like a 65 or a 66 strike would be relatively safe. So let's see. Yeah, it goes from a 22 delta down to a 5 delta. So 65. I wonder if we do the 65 and the 67.50. So 35 divided by 215, 16%. I'll take it. We can do what? 4? Yeah, it's a little over. I'll allow it's only $75 over. So risking 1075 to make 175. Make sure you have GTC selected. Send that off. So the Prob OTM on the short strike is 79.24. That's the 65 strike. Sorry, hold on. Didn't mean to click that. So 65 is up here. It's above this triple top. So very, very strong resistance level. And even if it trades up there, probably wouldn't be able to sustain it very long before the profit takers came in and pushed the price down, or short sellers. So moving on. Kroger, it's a grocery chain. Strong downward trend. Historically, it hasn't really liked trading above this +1 standard deviation LRC. Wonder what the 2-year looks like. Excuse me. Okay, not too helpful. So past 2 years, it's in an upward trend. Last 12 months. It's been a downward trend. Let's look. Not too crazy, but it did have a pretty decent sell-off. Now it's trying to rally, will most likely fail. Ideally, you want this to, like, we could have sold it on the April 4th here. This would have been an ideal time to get in, but at least now we have confirmation that it's showing signs of weakness. So time to pounce. So 55. I don't like how the delta goes from a 37 down to a 4. It's kind of annoying. And with the 50, it gives us a 65% Prob OTM. Just for giggles, what kind of credit could we get? So, excuse me, 81-cent credit. Because it's a lower probability trade, we'll make more on the credit because we're taking on additional risk. So a 19% return on capital when the 2 previous trades were around 15 to 16%. You need to ask yourself, is the additional 3 to 4% return on capital worth it to you? The way I look at it from a paper trading or just an option trader's perspective is look at my short strike again on the graph, 50. Okay, so up here, we've basically double topped, overall downward trend. If it were to trade back up to 50, how long could it sustain a rally from basically 42 to 50? So with the weakness it's shown, I think we're relatively safe. I would prefer to sell the 52 or 55, but there's no money in it, right? So risk 419, because we're taking on additional risk, we could trade smaller than our 1%, right? So instead of a 1%, we can trade 0.5% of our net lick, right? So I think that might be a good compromise in this case. So only risking 419 to make 81. So normally I would do 2 contracts or $840 risk. But because of the Prob OTM and how close it's trading to the short strike, I'm going to reduce my risk by trading smaller than normal, if that makes sense. Okay. Okay, so high IV 147, that's really high. IV rank 80, IV percentile 89. So don't know why the IV is high for EBIX. It will most likely rally for the next few days. Probably, my guess is hit or touch $22 per share. So we can add this to our watch list of almost ready. Right, I like it. The only thing I don't like, excuse me, the only thing I don't like about this trade is the low IV. Apologies, I have a bit of a cold, but I still wanted to get a video out today. So, look how MACD is trading compared to its past 12-month history. That's good. Stochastic is right where we like it. IV is a little low, but as long as we can get our 10% return on credit, or I'm sorry, return on capital, then I would put the trade on. Because of the consolidation around this $22 price level right here, that would be I would look to sell either the 22, 23, or 24. So 22, and so see how it goes from 0 to 75 cents. It's because it's not liquid. So maybe try the 22 and 24. Not quite 10%. So what if we do, yeah, that's worse. The 13-cent debit. Nope. Okay, let's try this. 20-cent debit. So, yeah, I think we could eke out a 10%. Can we get one more? Come on. No, we'll just do 5 because it's not as liquid as I generally like. So risk 900 to make 100. 88. Short strikes 22. So 80% prob OTM. And yeah. If it does run up to 22, it would be so exhausted from climbing so high that it most likely wouldn't continue trending higher. So right here, it did consolidate for a time, but then you'd have theta ticking away every day, helping your position. So not necessarily a bad thing. If I was short the 22 strike, I would be a little nervous because it's just like, and then sold off, right? So it went from 623 to 810. Yeah, so I probably, if the chart was doing this when we were short the 22 strike, probably would have rolled it out another 30 to 45 days to expiration to give us time for it to sell off. And thankfully, I haven't had to roll any options yet, but when the time comes, I will most definitely include that in a video. I won't go into a fair amount of detail on my thought process when I roll an option, which thankfully I don't have to do very often because this strategy is pretty solid. So, habit. I don't like trading pharmaceuticals because they're so volatile, but earnings was back there. Looks like it's showing some weakness, but it trades at and above this line, and we're not even there yet. So if anything, we'll just add this to a watch list and keep an eye on it. It's a gold stock or a miner stock. If it were double topping up it here, I might put the trade on, but we're not quite there. So we'll add to watch list. Okay, so you can tell by the way the candles look that this is a lower volume stock. And we just hit a new 12 or 52-week high. Okay. The overall trend is up. What's the 75? And it hasn't really made it up to this top channel. So 75, 31 delta, 75 and 80. Yeah, so We'd have to go up here. I don't think it will make it that high. So, okay, so once again, the calculation is the max profit divided by buying power effect, 23%. Looking at the short strike of 75. Prob OTM is 71.6. But looking at the chart, I would probably give it a 80% or greater Prob OTM. And for that reason, we're going to place a trade on this. So risk 812 to make 188. Okay. That's all there is to it. Got filled. Just not liquid. Look at the candlesticks on this. But it is in an uptrend. I do not like that. But I do like where the MACD and the stochastic are. So 70. Okay, so 83.51, 70, 75, way up here. Okay. I kind of like that. So a little under 10%. So 45 divided by 455. What we can do is ask for more credit, right? So just might take it a little bit to get filled. So that would hit our 10% requirement. Risk 908 to make 92. Now, if you're concerned that you won't get filled, you could, I mean, it was close enough to 10%, right? It was like 9.8% return on capital. Probably could have done it for that, but we'll see. Mm-hmm. Okay, I like this downward trend. It hasn't really played around with the +2 standard deviation LRC all year. What does the 2-year look like? Definitely a downward trend. Okay, go back to the 1 year. Let's look at the 210. So that would be, you know, over $8 above the 52-week high. Because it's Salesforce, it is quite liquid. However, the strikes are 10 wide. So one contract is going to be $1,000 risk. But subtracting our credit brings it to 887. So in this case, not a big deal. Did I close my calc? Anyway, It's like around 13, 14%. So we'll go ahead and send that off. Because it's more liquid, we got a pretty fast fill. And I normally would be done if I wasn't explaining everything. Honestly, this strategy shouldn't take more than 30 minutes a day, right? And depending on the size of your account, you might be able to earn a living by trading this strategy if you have a larger account, depending on what your financial needs are every month. But even if you're not trading for a living, it would still be a solid way to have a nice little return on your capital. Okay, EPD, not familiar with this security. I do see that a very strong level around 2730. 28, yeah, just yeah, too bad. There's no money in it. Okay. It generally doesn't trade too very much higher than this +1 standard deviation LRC. So it's like the 40. Yeah, no. Okay, no, that's not going to work. GDX. Yeah, the MACD is way overbought. The price is showing weakness. So, yeah. Let's take a look at like the 35 strike or higher. 38. Maybe like even a 37. So I tried to tighten the spread a little bit. Instead of the 5 wide, I did a 3 wide. So risking 300, subtracting our credit from that equals 262, right? So above 10%. That's good. Let's do 3 contracts, switch to GTC. We'll send that off. So when possible, You can tighten your strikes if you can get about the same amount of credit out of, say, a 3-wide strike credit spread as you can from a 5-wide. That will help improve your return on capital, because for the same amount of credit, you are risking less, basically. So it's kind of hard to find sometimes, but I think that was a good compromise. FSLY. Yeah, I think there might be some good trade here. Let's look at the 20 strike. Okay. So risk 169 to make 26. Change it to GTC. So Probo TM 86, Delta's 20. And it would have to go up here. It would have to touch its 52-week high, which I feel is unlikely with the MACD and the stochastic looking like this. So GFI. Yeah. See what, like a 16 or 17 strike. Okay, so let's see 17 and a 20. Right at 10% return on capital. Risk 900 to make 90. Yeah, we'll do it. So 17 strike once again up here, above its 52-week high. The overall trend is slightly to the upside, but it has been range bound between these LRCs. So I think it's incredibly unlikely to reach the 17 price level by expiration. Here's another one. General Mills, they make cereal. I like the MACD and the stochastic and the DMI heading lower. Let's look at the 90. Okay, not too crazy about that, but risk 203 to make 47. So it's like 25-28% return on capital. Do 5 contracts. Yeah, we'll send that off. I know we're in a little bit of a shopping spree today. GLD. Okay. Upward trend, don't like that, but what I do like is the MACD and the stochastic. Let's look at like a 190. I know it tracks gold. Makes me a little nervous because of what's going on in the market, but what if we came down here to the 198 and the 200? Maybe do 195 to the 200. Okay, like around 15%. Short is of 195. Way up here. Yeah, feel good about that. Change that to GTC. I think we couldn't do 2. Yeah, we'll do that. GSK, downward trend. Looking over the last 12 months, hasn't really hung out above this LRC, this blue one, so most likely will fail. Got a bearish engulfing forming today, which is bearish. So let's look at like at the 42-ish. Okay, so no money in that one. What if we do the 40 and 42? So I'm just looking at the bid on the short strike and the ask on the long strike. And you wouldn't want to do the 43 because they're asking 25 cents on the ask. So usually it should be cheaper, not more expensive, the further out the money you go. But since the 42 is only 10 cents, 15 cents cheaper, I'll go with that and save myself, 15 cents. And even the 44 is 10 cents, but I can save myself $200 of risk for the same price. Why not? So above 10%, we'll do 5 contracts. Maybe we can get 6. Okay, yeah, we'll do 6. Risk 1038 to make 162. I don't like the 80% prob OTM, but let's go to the chart and the 40. Yeah, I don't think we'll get there, especially if you look over the last 12 months. It hasn't even traded above this. And with the overall downward trend, MACD, stochastic, DMI, RSI, so many things are indicating a reversal. Fairly confident this trade will end up going our way. Fortinet. Don't know anything about this one. A candle is very bullish today. We will add it to a watch list. All right, well, I know today's video is running a little long, so this is another gold ETF. I don't want to have too many gold-based positions, as I'm not overly bearish on gold right now. So, yeah, I'm sure there's a few other trades we could get into, but we'll go ahead and call it for the day. So thanks for watching. Hopefully you learned something. Please make sure you subscribe, like, share, and comment below. I read every comment, and I'll do my best to analyze a stock I see in the comments. So, thanks again. Have a great day.